Breaking news, global markets are bleeding. But here's my take. This is nothing compared to what's coming. Dow Jones has officially entered correction territory. Nasdaq is down over 8%, more than 10% below its all-time high. A massive pile of cash is sitting on the sidelines. Billions of dollars, waiting. Historical data shows 350% drops in the last 50 years. This 6% drop? Nothing yet. This dip is just cookies. The whole bakery isn't on sale yet. 1973 -74 to -50%, 2000 to 02. -50%, 2008-09. -50%, today. -6%. But the geopolitical storm is real. Operation Epic Fury, February 28, 2026. U.S.-Israel joint military operation against Iran. Strait of Hormuz. 20% of global oil passes here. Now blocked. Tanker traffic down 95% since the war began. A high-level official social media post went viral. Go to the strait and just take it. Go get your own oil. You'll have to learn how to fight for yourselves. Help won't come from outside. NATO rift, US versus Europe over oil and security. Some individuals and groups are using this chaos to accumulate quietly. They won't tell you that. Some individuals and groups profit from fear while retail investors panic. Don't be the retail. EU's top diplomat. This is not Europe's war. Germany. No reason to relax sanctions on Russia. Israel is fighting a multi-front war. Gaza, Lebanon, Iran. Increasingly isolated. Gold down 22% from its January peak of $5,595. The gold paradox. War usually drives gold up. So why is it crashing? Reason 1. Dollar strength. The dollar is the ultimate safe haven. Reason 2. Real yields rising. Fed holds rates, no cuts priced in. Reason 3. Liquidity crunch. Hedge funds sell gold to cover equity losses. Plus, Gulf nations are selling gold too. With oil revenues cut and facilities damaged by Iranian strikes, they need cash for reconstruction. Gold stuck in Dubai is selling at $30 per oz discounts. 3 Gulf states are reviewing trillions in sovereign wealth funds to offset losses. Oil price shock. Brent crude spiked to $115 per barrel. U.S. gas prices cross $4 highest since 2022. Airline stocks crushed, nearly 30% losses due to fuel. Energy winners. Oil County A plus 12%, Oil County B plus 17% while market craters. Analysts. If disruptions continue, Brent could hit $134 to $190. Stagflation risk, rising prices plus slowing growth. My message. Don't rush to buy this dip. Wait for the real crash. With billions in cash on the sidelines, the smart money is not buying the 6% dip. Most retail investors buy 10% dips. The pros wait for 50% dips. S&P 500 is not even in correction yet. Just 2 to 3% more to go. A major global bank warns, elevated tail risks for oil markets. One senior strategist put it simply, only 2 things matter now. The duration of the oil shock, and how central banks react. Another portfolio manager made a memorable point. It's difficult to see through the noise, when the noise is all we have. Markets have priced out US rate cuts. Europe expects 3 hikes. Polymarket. 36% chance war ends by mid-May, 60% by end of June. This is not the storm. This is the calm before the storm. The real impact of the Gulf War and Trump's policies will be felt in the coming months. Gold down, oil up, a rare divergence that signals deep structural stress. The US is stepping back as global policeman. Markets haven't fully priced this. The real edge? Patience. History shows waiting through 1973, 2000, 2008 worked. Waiting now. So what is really happening in the markets right now? Is all this volatility natural? Or is there something else at play? Public data shows that every major market-moving announcement in recent months has been preceded by unusual trading activity. Massive volumes, perfect timing. This pattern has repeated itself multiple times. Meanwhile, defense spending has skyrocketed. Weapons sales to conflict zones have accelerated. And certain sectors have seen extraordinary financial gains during the same period. We are not accusing anyone. We are simply asking. When public records show the same pattern over and over again, shouldn't we at least pay attention? The market isn't just reacting to war. It may also be reacting to something else. And that, something else, is what smart investors need to understand. Your choice, panic or prepare. I say prepare. Smart investor checklist. Don't chase small dips. Stay liquid. Watch oil greater than $100 and Fed. Real opportunity comes when everyone else is terrified. That moment is not now. One simple truth. This dip is nothing. The real storm is ahead. Subscribe for weekly market updates. Don't miss the storm analysis. Like if you're staying patient. Comment. Are you buying or waiting? See you in the next video. Until then, stay calm, stay ready.